Hello everyone. We're making a start, so hopefully it's all working at your end. The sound is all okay. I'm watching this on another screen, and I think there's a slight lag between me starting and things actually moving. So I'm hoping that it is working. If someone can confirm the sound is okay, that'd be great. I think if it is quiet, if you slide up the YouTube volume thing at the bottom left of the screen, that should make it better. But I think for most people, the sound works fine. So let me just go through our risk warning while I'm doing the introduction. So it's important to understand this presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 75% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. There we go. That's a lovely welcome to today's live session. So thanks for coming along. How it works, we do regular updates on our YouTube channel during the week on various markets, gold, silver, oil, S&P, some crypto now and again. And we've decided to do these live streams every week just to see how popular they are, really. So we do them at the end of the week, a look back at what's been moving for the week so far, and a look ahead rather to what could be the interesting markets to watch next week. So I do this with Capital.com, obviously a broker regulated in the UK by the FCA and also regulated by SISEC. Today we normally do promotions for these events. Today we're doing zero spread on the pound against the dollar. It is moving a bit today, pound against the dollar. It's an interesting week for the pound. We'll talk about this when we have a look at the markets. But our special offer today is no spread till 6 p.m. UTC. So that's another 3.5 hours of zero spread. So if you have an account with us and you trade a pound, there's no spread. If you open an account, it takes a few minutes to open an account. Then you can get up and running and trade it with zero spread on the pound against the dollar. So that is today's special offer. If the audio is low, Arta, if you try sliding up the YouTube volume thing in the bottom left of the YouTube screen, hopefully that should make it better. It's a bit strange, this audio. Most people say it's okay, but there's always a few comments saying it's a bit quiet, so I don't know what to do because it is turned up to max at my end. So as usual today, we will look at different markets. We'll look at stock market indices, FX, gold, silver, oil, and anything else that people want us to look at. And I'll talk a bit, because there have been a few questions about the trading approach, and I'll talk a bit about that as well. So we'll talk a bit about strategy, money management, and running trades, because the trades I tend to do, if you follow us on YouTube, you'll know some of the trades run for weeks and sometimes even months. You know, it's not day trading that I'm doing, and it's very similar to the way I trade my own stuff. So we'll talk a bit about that as well when we're looking at these markets. And when we look, we'll bring the account up. So we'll spend most of the time for today's presentation will be on our trading platform. So it's not going to be pages and pages of PowerPoint. So it will be, we'll just flip through this quickly. So important events for next week. First of all, Monday is a holiday in the US, Martin Luther King Day on Monday. So US markets, they may trade out of hours, but officially they're closed. So we could have, famous last words, a quiet day on Monday, but we do have Chinese GDP out in the morning. Wednesday, there is UK and EU CPI inflation numbers. They could be interesting, you know, given the year we've just been through, given that interest rates are rock bottom. What does inflation look like? Inflation does not appear to be a problem really in major economies at the moment. Maybe it will be later this year, but it'll be interesting to see what those numbers look like. And then Thursday next week, we have the European interest rate decision next week. So we'll see how the markets react to that. So a quick flick through the markets now, then we'll jump on the platform. Stock markets, broadly, all still positive. US markets at or near all-time highs. The DAX, I did notice the DAX has taken a bit of a hit today, but it did push out to all-time highs in the last week. Gold and silver drops back sharply, and again I think even more so in the last hour or so, and consolidated. Same for silver. A weaker US dollar had helped both strengthen recently, but I do wonder if that's changing. We will take a look at the dollar, because I do think the one major thing to watch in the weeks ahead is what is the US dollar going to do? Because since March of last year, we've seen a weaker US dollar. So it had lost about 10-12% against a basket of other currencies. We had that $1.9 trillion stimulus announced yesterday. I think Joe Biden's going to be pushing that forward Thursday of next week. But if we see a turnaround for the US dollar, this is clearly going to affect a lot of markets. So we will look at the US dollar today in a bit more detail. Bitcoin, of course, we have to talk about Bitcoin. Significant volatility over the past week, back to $30,000, up again near 40,000, I think today or yesterday. But is it just a dead cat bounce on Bitcoin? We'll take a look at it. Obviously, the rules have changed in the UK because of the FCA decision that was it from the 6th of Jan or the 8th of Jan? I can't remember. But we're not allowed, or brokers are not allowed, who are regulated by the FCA, to offer Bitcoin to UK clients as in the form of a derivative. I do still have the Bitcoin chart on the platform because I saved it, but not even I can trade it with my the Capital account I use for these videos. But we'll take a look at Bitcoin. Crude oil, it's come off a little bit today, but best levels since February 2020 for crude oil. And it is quite surprising that, but it continues to defy what was a pretty cautious outlook for this year. FX, we saw yesterday, very, very briefly, the pound moved to 137. Best levels in 33 months for pound against the dollar. The euro has been going the other way a bit, slips to a 1 month low this week. Maybe it's even a bit lower now, but we'll take a look at all of that. So there's a lot to watch. And what I'll also take a look at, because the trades I do on this account here, again, if you subscribe to our YouTube channel, you know we do lots of trades on this account, but I tend to focus on the popular markets, you know, because some of them, not more obscure markets, but FX, gold, silver are popular on YouTube. There's a whole load of other interesting markets at the moment, and I'm going to talk about some of those as well. We'll talk about some of the agricultural markets, because some of the moves we're seeing in the likes of sugar, cotton, wheat, we've seen some really big moves there, but it's not something that a lot of people are interested in. But if it's moving and there's the potential for making money, I think it's well worth a look. So we will take a look at some of those markets as well. As usual, if you're watching this and you, what was I going to say? Have any questions, put the questions in the chat. I've got the chat on another screen, so I'll keep an eye on the chat and try and cover anything that we don't cover through our normal markets. But let's start off with this US dollar. Okay, we're going to look at pound against the dollar, euro against the dollar, all that sort of stuff. But just to set the scene, why I think the dollar is a really interesting market over the next few weeks and can affect clearly lots of other markets. This is the dollar index. So the dollar index, you can trade it the same as anything else, and it's the dollar against a basket of other currencies: the pound, the euro, the yen, the Canadian dollar, the Swiss franc, and some others that I always forget. In March of this year, the dollar index punched to 104. So we had March last year, sorry. So we had the coronavirus panic. Everything gets sold off. Where does the money go? The money goes into dollars. So we saw the dollar acting as a safe haven back in March of this year. But you can see from March down to, this year basically, January the 5th, it traded down to 89. So it lost 15 big points. So 15% fall in the US dollar since March of last year. And clearly, if the dollar's falling, gold is going up, silver's going up usually, pound, euro, all these things are going up if the dollar's falling. But what is interesting, if I make this a longer term chart, is where we are. So I'm on a weekly chart now for the dollar index, right? We've got this major low for the US dollar index, and if you're a client of ours, the code is DXY. If you want to search for it, it traded down in 2018, so nearly 3 years ago now. It traded down to 88.25, and then staged, a pretty good comeback. And over the last week or so, it's come within 100 points of that level. So I think it's really interesting down here. And for those of you who are fans of RSIs, this is the weekly chart we're looking at. But we do have bullish divergence on the RSI. And if you watch the videos where I talk about, technical analysis stuff, I'm not the biggest fan of the RSI because I think it can give early signals. But this idea of divergence can be a powerful one. And divergence is where the market here makes a low here, rallies. The RSI has made a low, obviously. Then pushes lower again. But the RSI has made let's zoom it in, a slightly higher low. So it can be a suggestion that the trend you're looking at, in this example, that the downtrend from March could well be running out of steam. So I do wonder, are we going to see a US dollar comeback? It's early days, but I was looking just before I came on. Because if you look at the slide since November, so the market sells off, we get a few days of a bounce, the market dumps again, we get a bit of a bounce, and off we go. This time round, we've had a bounce since the 6th of Jan. We've had a sell-off for a couple of days, and it's pushed higher again. So I do think it's a really interesting market to watch. It's still early. Let's not forget, it's only about a week or so ago that it made nearly a 3-year low, the dollar index. But I think this is a really interesting market to watch. So there you go. I think that is really the one to watch over the next few weeks because of the impact it could have on everything else. Right, let's start things off with stock markets, and as usual, I'll start with the S&P, but we'll also look at the DAX as well. So the S&P, I think, if you're only going to follow one stock market, the S&P is the market to follow. It's the broader US stock market index, 500 stocks. It has been admittedly skewed because of the performance of the so-called FANG stocks: Facebook, Amazon, Apple, Netflix, Google. But we are where we are for the S&P, and it has already this year moved out to fresh all-time highs. It's been under some pressure over the last couple of days. We did put a video out earlier this week on the S&P saying, is it a bubble? Because there's a really interesting sort of column done by one of the founders of the money manager GMO. And if you go and watch that video, I talk about the bubble, maybe a bubble in markets. But basically, this gentleman who has been in markets forever, Jeremy Grantham is his name, says this could end up being one of the great financial bubbles. What we're seeing in stock markets compares it to the South Sea bubble in, was it the 1600s? The 1929 Wall Street crash, and the dot-com bubble in the late 90s. So he does say, valuations are just ridiculous at the moment. But let's look at stocks. We are seeing it coming under a bit of pressure today. But for me, at the moment, for the S&P for stock markets, I'd still want to be a buyer on weakness. So we can say, well, it is overvalued. Yes, it is overvalued, but it's still going up. So for me, for stock markets, we could definitely do with a bit of a correction from here. But I've picked up on this trend just from, let's put an RSI in as well. I've picked up on this trend just from, when is it? November, mid-November lows. Let me just change my RSI to a 10-day RSI and see what it looks like. Here we go. And you can see it's done a pretty good job. If we flip this over to an hourly, to a short-term chart, our trend looks something like that off those November lows. This trend line's done a brilliant job. When it sells off hard, it doesn't stay down for very long. So maybe if we saw a bit of volatility next week, I think it could be an interesting market again in the second half of next week. It's been fairly quiet for the last week. You can see here, stuck in a fairly tight range by recent standards. So definitely it could do with some weakness from here. But I think if we get knocked back towards 3,700, it looks like a buying opportunity. I think the video I did this week on the S&P, we do have an order at the moment sitting just up here. If it breaks out to fresh all-time highs, so buy in again. But I think for me, if it gets knocked back, it definitely looks like a buying opportunity for the S&P 500. So it's interesting. It's interesting because it is so overvalued. From an earnings point of view, you're paying. I think it's valued at 30 times earnings at the moment, which is historically very high. But that's the run we've had since the March low. So I think this year will be an interesting year for stock markets. But for me at the moment, I'd still be tempted to be a buyer rather than a seller. I mentioned the DAX, the German index. Let's take a look at that. It is under a bit of pressure today, but it was only about a week ago, wasn't it? It pushed out to its best levels, all time. I think it is all time highs, isn't it? So you can see in early 2020, it got as high as about 13,800. Had a look at 13,400 in September, and then recently we've pushed up to here, traded up through 14,000 on the 8th of January. So again, I think the DAX is always an interesting one because we do have decent levels of volatility in the DAX, but maybe even this afternoon it's going to be interesting because it's pushed back to the lows from the 11th of Jan. Those lows were about 13,800. So I think it's an interesting market to watch this afternoon from a short-term trading point of view. But again, from a longer-term point of view, I think even if we do sell off a bit from here, I'd still be looking to be a buyer. If we see some deeper weakness this afternoon, for me, levels to watch going into next week, these lows from the 5th of Jan, just ahead of sort of 13,500. So let's see what happens. But I think stock markets are interesting. It's been a bit of a quiet week, but the broader trends are still definitely up, I think, in these markets. Right, let's take a look at some other things. Let's jump in and talk about FX, because I think it has been an interesting one. I'm going to talk about the Australian dollar as well, because I've got some trades on that at the moment. Clearly, it's a commodity-driven currency. But let's kick things off with the pound against the dollar. So pound against the dollar, we do these trades, and I've had, again, if I go into this, you can see we've got trades running from the 22nd of December, the 7th of December, and the 30th of September. So in the videos that we've done on the channel, I've always been looking for buying opportunities for pound against the dollar, but I probably need to think about moving those stops up to lock in some profits. But I think it's interesting, the move we've seen since May. We've had this great trend, pound against the dollar, punching higher. Sell-offs have been buying opportunities. You can see it is coming under some pressure today. And I think this is another interesting market going into next week, considering we are seeing a bit of US dollar strength over the next couple of days. And what's interesting is with this $1.9 trillion stimulus, you may expect the US dollar to sell off. The fact it hasn't sold off and has done the opposite, it could be a warning sign. It could be a warning sign that actually the market has already factored in the impact of stimulus on the US dollar, and perhaps we are at a bottom for the US dollar. Let's see what happens. But the pound yesterday traded up to 37.10 yesterday, and that was its best levels since April 2018, pretty much. So I think it's still clearly a really interesting market. We could well see a bit more weakness from here. There's lots of support, as you can see. If we pick up on the 11th of December lows, around about 130, 130 to the 132, then we've got shorter term support. If we flip this over to an hourly chart, coming in, where are we going to pick it up from? About 134.50. So I think there are lots of levels to look to trade off, and that's clearly very much the trading style that I try to use when we do the videos talking about markets. I look to have an obvious place for a stop loss, and because when we're doing the videos on the YouTube channel, we only look at a market once every couple of weeks because we're doing different markets. It tends to be quite a longer term view, which is why I have some of these trades that end up being winners can end up running for weeks and maybe months. But it's not dissimilar to the way that I trade in my own account. I mentioned the Australian dollar. The Australian dollar has been a really good, for a trend follower, it's been a really good market. Here's what's this? This is a daily chart. Here we go. Look at the trend in the Aussie dollar this year. I mean, I didn't really get into it till here. But again, we've got an obvious trend in front of us, haven't we? Or we still have at the moment, even though it's been a bit weak. So for me, I'm just looking to jump onto these trends, have a reasonably wide stop to give the market time to move in my favour. But again, quite hard hit today. Finished yesterday, the Aussie, at about 77, 75. It's come off 50, 60 points today, which is, based on what we've seen recently, is a decent move for the Aussie dollar. So I think that perhaps we are seeing some change in these markets with the US dollar strength. What's been interesting has been the euro. The euro against the dollar again. If we go back to beginning of the year, 6th of Jan, pushes as high as 123, which was the best levels since here, April 2018. And that was when the top was. The top was only at sort of 125.70. So it's quite interesting that we've seen quite a bit of nerves come in for the euro against the dollar over the last week. We've seen it drop a couple of 100 points or so against the US dollar. I think it's an interesting one to go into next week. And I think if you were thinking about being a buyer, then there's an obvious place for stop losses. We've got these old lows from the 9th of December running from about 120.30 through to 120.60. So it's only 50 to 70 points below where we are now. So I think the euro is going to be a really interesting one to watch next week. So personally, I still think we will see the euro snap back and we'll see a rally. But it'd be interesting to see where this weakness stops in the face of the current run of US dollar strength. So let's see what happens. Now let's take a look at gold. I got clobbered on the gold trade we did last week. I think I had the stop in at 1850, so it got stopped out. I think it was when we were doing last week's live stream. I think I bought it. We did a video earlier in the week, and I bought it somewhere 1920, something like that. It got stopped out on that big candle down, and since then it's pretty much consolidated. I think it's a difficult one to call gold, so I haven't rushed back in to do a trade. I mean, clearly, if we wind things back to August, we had all-time highs in August at $2,075 an ounce. Since then, it's just been selling off. It traded as low as 1760, 1750, end of November. But it did look, this latest run from December looked like it was finally shaking off that weakness. Okay, so if we'd picked up on a trend looking, I don't know, something like that, if we just focus on the price action, the moves we saw from December and into this year looked like it was shaking off that weakness. And I think if you still believe that the case, and I do still think that is the case, I think that perhaps we've broken this correction from those highs. So for me, my bias, despite getting stopped out, my bias is still to look for buying opportunities for gold. So at the moment, maybe I wouldn't be a buyer just yet. But I suppose it's a fair enough argument. It's been stable over the last 4 days. But at the moment, I think it's interesting to look at, for me anyway, a medium-term opportunity with stops the other side of those late November lows down at 1760. And 1760, it's $80 away from where the price is now. But I'm a big fan of using wider stops, giving the market time to prove me right, not getting knocked out in the noise of the market. Let's not forget, just last Friday, the price of gold moved $80, $90 in a day. So if I was a buyer now with a stop at 1740, let's say $100 away, it's not a ridiculous stop if I'm looking for a medium-term swing up through 2000. So I think, again, gold is an interesting one to watch next week. But so much of this hinges on what we started with, the US dollar. Are we going to see the start of a comeback for the US dollar? No one knows. But I think it's interesting, the price action that we've seen this week in the dollar, particularly in how it reacted to the stimulus announcement last night. Here's silver. Silver again, another one that's taken a bit of a hit. I did have a longer term trade on silver. I got stopped out of it yesterday. I bought into this recovery and dragged the stop up. I suppose an aggressive trade on silver here. Silver is always a bit of an odd market, but it's always quite fun, I think, in terms of volatility. An aggressive trade on silver with the price at, $24.90, $24.95, is to be a buyer. We've got knocked back to the lows from the 11th of January. Oh, not near the lows of 11th of January, I should say, which come in around 24.30. So are we going to see the price try and build a recovery from here and go back up to where we were a week or so ago, week and a half ago, up at 28? Let's flip it over to a daily. For me, let's just tidy this up a bit. We've been sideways in silver for a good few months since September. It started breaking higher in December. The price action's positive. It's been knocked back, but we're still above the early December lows. We're still well above these old lows, which are really important, I think, sort of 2150, that sort of area. So it's been an interesting week for the precious metals, but for me, I wouldn't be writing them off just yet. I do read a lot of the comments on the YouTube channel, and a lot of people saying, oh, gold and silver is dead. And it's quite interesting when you get lots of comments like that. It's exactly the time the market does the opposite. So it wouldn't surprise me, based on the price action, if we did see something of a short to medium term recovery in these metals. But you need to, as usual, use sensible things like stop losses to manage the risk, on these sort of trades. So that's silver. While we're talking about metals, let's talk about copper, because I saw somebody mention that in the chat, and it's another really interesting market. It's one we don't cover on the YouTube channel, or we haven't, because I think when we've tried it in the past, there's not been that much interest. And clearly for us, for the YouTube channel, we want stuff that people are going to watch, obviously. But it's a really interesting market. Look at the move in copper. Absolutely fantastic move in copper. Off those March lows, when copper was down around 2. It's recently traded as high as 3.8. So we've seen the price of copper not quite double off the March lows, but it has pushed out. It's broken through the 2019 highs. It was doing that in August of last year. It's broken through these highs from 2017 and 2018. So it's really interesting, copper. It's come off again with a bit of dollar strength today and yesterday. It's under a bit of pressure. But I think if we got a deeper sell-off in copper, big support at 3.4 from early December, trend line support coming in about 3.3. So for me, I do have some open trades on copper. If we did see any weakness, I'd still be looking to be a buyer into any weakness there. So I think that's another interesting market, one that people don't talk about. But I think if we're trading, if we can find markets that have great trends, it does make trading life, I think, a lot easier. I think if we can try and identify these. And oil, let's talk about oil. And then we'll do Bitcoin, actually. We haven't done that one yet, have we? Oil, I think it's been quite incredible. The percentage moves we're seeing, okay, they're not as drastic as something like Bitcoin, for example. But you look at oil in November, oil early November, this is US, this is West Texas crude, traded briefly below $34. And here we are yesterday. Where did it get to yesterday? Got as high as 53.85. So oil has rallied by $20 in about 2 months and 2 weeks. Massive move higher in oil. You can see the RSI overbought at chunks on the way up, and this is one of the issues with RSI is that it will go to an extreme really quickly. But trading at 54 is the best level since Feb last year. I think it's interesting that the high in Feb was 54.65 was the high in February last year, and it's come to within 80 cents or so of that high. So I think oil again. I have missed out. I think I've got a trade from a video we did, but in my own account I've missed out on the move. There's the trade we did on the 5th of Jan in oil. So bought at 48.47 and still in that trade. I must admit I've missed out for my own account, but for me, if it sells off from here, I'd still be looking to be a buyer. I think obvious levels to watch. If we flip this over to an hourly chart and bring this up, here we go. So there's the move off those November lows at $34. Lots of support, I think at 50, because 50 is such a big number for oil. But then little pockets of support on the way up at 51.5, back down here at 50.40. So I think it's going to be another interesting one next week. So for me, I would still be inclined to be a buyer of oil. I think this trend has confounded many of us. But you can't argue, or I can't argue anyway. You might want to argue with it, but I can't argue. With that trend in oil, absolutely incredible. So. But how much further can it go is always the question, isn't it? I think if it cracks these old highs, let's call them $55 a barrel, there's I think the next target would be 60 and higher, which does seem incredible considering what the world economy is going to look like this year. That it's still clearly going to be somewhat shaky. Anyway, there's oil, and let's do Bitcoin. I did a video earlier this week on Bitcoin, and I said, at the beginning of the video, I think I said, well, is the top in for Bitcoin at 42,000 is the top in. That's it. We've had loads of hype about it. It's seen this massive move over the last few weeks. Surely it's too late. And then I looked at it because I think I was doing the video sort of here in terms of time, and I looked at it and I thought, well, if this was any other market, it'd be looking to be a buyer. Because the trend off those lows, those December lows in Bitcoin, that trend line has done a great job. And I think I said 30,000 was the level. And of course, I didn't follow my own advice. It did trade down on the 11th of Jan to 30,200. And we've seen it bounce back to 40,000, but come off hard. I think it's interesting, isn't it, here, that the fact that we've seen over the last, 24 hours in Bitcoin, some nerves coming back in ahead of these old highs, these old all-time highs from just last week, from sort of 40 to 42,000. The market punched back up to 40 and has sold off about 10% over the last 24 hours. And let's forget it's a cryptocurrency. I think I don't care what it is. It's just a market. It goes up and down. I think people will get too tied up in the fact that it's going to be the future of money. It's going to change the world. One Bitcoin is going to be worth $10 million a week on Wednesday. Let's look at it like any other market. I'm sure there will be plenty of people who sat there watching Bitcoin go to 42, near enough, and thinking, oh, this thing is going to the moon. And then bang, gets hammered back to 30. So they see the market fall back, 30% in pretty short order. And I think it's quite interesting, the bounce back we've seen, that clearly we've seen sellers come in ahead of 40,000. So I think maybe it was people who missed out last time round at selling, see it trading back up towards 40 and think, right, let's take some profits on this thing. So I think it is quite interesting that it's come off from here. So for me, at the moment, let's look at it like it's any other market. I wouldn't do anything here. But I think if we get a push back towards 32,000 again, I think it looks like an interesting trade. If we're down here somewhere, 32, 33, something like that, we've got big support at 28. We've got trendline support at 32. We've got support at 30. So for me, in the low 30s, it does look interesting again for a push back up to 40. I think the even more patient approach would be to do nothing unless it breaks out to fresh all-time highs. Because I do think if it breaks 42,000, there'll be a whole load more FOMO, the fear of missing out. People thinking, right, this time round, I'm definitely going to buy it, me included probably. So I think if we break 42, you'd expect it to really run then towards 50,000 if we break 42. So for me, that would be the strategy at the moment. If we get a sell-off down to 32, 33, look for strength to come back in. Stops the other side of 30 will be the tightest I'd have my stop. Otherwise, the other side of 28. But it's interesting, the fact that it has backed away from 40,000, but that trend off those lows going back in this chart here on the hourly chart to December when it was 17,500, that trend is definitely still up, and from the videos we do, I can't really ask for the trend. Well, we have looked at gold. Someone's asking about gold. We did look at gold, so there will be the recording available of this. You can watch it after we finish doing all this sort of stuff. So that's it. So I'm going to go into the chat now and pick out some of the markets that other people have mentioned. But I think there's a whole load to watch next week. There is a holiday on Monday for US markets. But I think because we have seen, just to go back to where we started, look at it now, it's still going strong. This US dollar index is strong today. You can see that the blue candle, the big blue candle threatening the big blue candle, or the blue candle from the other week. We're seeing quite a strong performance by the dollar index today following the announcement last night. Look at that. That's really getting a move on. Following last night's announcement, which would have been around about here somewhere, wasn't it? about stimulus. Yeah, and some people may have expected dollar weakness on stimulus. We're seeing the opposite. Are we going to see the US dollar continue to gain ground next week? Because if it does, that is going to put gold under pressure, silver under pressure, pound, euro, all this stuff. It makes for a really interesting market. So I would definitely, if you don't normally watch the dollar index, but you trade FX, keep an eye on some of those next week. Oh, hang on a second. I didn't mean to do that. Right, let me go into the chat and pick out some of the questions. Someone mentioned right at the beginning ExxonMobil. So there has been, was there some sort of whistleblower scandal today? I saw an announcement a bit earlier today on ExxonMobil, the giant US oil company. So they have been a bit hit at the open today. So for me, here's ExxonMobil. Here's the chart for ExxonMobil. For me, if I didn't know about this whistleblower scandal that's come out and we've seen the shares hit, I probably wouldn't do anything anyway. You know, we do have a good trend off these lows, these October lows in ExxonMobil, but we do have, you know, clearly a barrier up at $55 a barrel, where we saw it peak at $55 a barrel, $55 a share, where we saw it peak in June. So for me, for ExxonMobil, let's see if the dust settles over the next couple of days, and do we see a bit more strength come in, a bit more confidence come in. You can see the hit it's taken today. We've got the gap down. So it closed yesterday at $50.27. It's open today $48.60, that sort of area, and it's still selling off. So I suppose from a short-term trade point of view, we could be looking to see if this weakness stops, and perhaps there's a short-term opportunity in there. Looking at it from a longer-term point of view, I'd wait and see next week and see where this sell-off stops, and perhaps we concentrate on this trend since October and see what happens. If does it sell off back towards 45 and strength comes in and there's a buying opportunity. Let's see what happens. What was the other one this person mentioned? Was Wells Fargo, the US bank. It's down 7% today, Wells Fargo. And again, it's interesting, this one, I think. This is an interesting one, just again from the price action, because for me, we had a breakout yesterday on Wells Fargo. So we had highs in April at $34, highs in June, pretty much 34. And then yesterday it broke out and it's got knocked right back today. So I think that's another interesting one for next week. You know, there are such things as false breakouts. I think there are two trades here. I think the immediate trade, if you were bearish on Wells Fargo, we've seen a rally up yesterday and it's immediately collapsed back below the old highs. So an aggressive trade would be to sell short. For me, I'd probably wait a couple of days next week and see, do we have another push back up to 35? So I think that's an interesting one. We did have the breakout yesterday. Anyone who bought into that breakout, is how it goes sometimes. You know, they're down about 7 or 8% already today because we've seen a sharp reversal. So I think it's interesting, but I'd want to see what happens next week. For me, I'd be tempted to look for a buying opportunity here. Wait for it to perhaps sell off a bit more. You know, stock markets are a bit weaker today, and see if we get a better entry point next week for another push to have a look at 34. So let's see what happens. Let me just go back right to the beginning of the comments and pick up any stuff. What have we got? Nickel. Do you know, I don't think we cover nickel. I don't know though, I might be wrong. Hold on a second. Oh, nickel spot. No, not available for trading. I don't know why that is. I did look on another I'll be available soon. I did look on another platform yesterday and they didn't cover it either, because I was looking to see if there was a trade on nickel. So based on the very small amount of data we've got, how far back do we go? You know, based on really what's been happening this year, I would be inclined to be a buyer, because we do have something of a short-term trend going on off the 23rd of December lows. But for me, we need a bit more data, so we can't trade it with us just yet. Which brings me to another one someone mentioned, platinum. Another market, I think that doesn't get much sort of chat about it on Twitter and YouTube and places like that. But another interesting market, because we have had, I think we have looked at this in the past on previous live streams. We've had a really good trend in platinum for about 8 months now, 9 months now. and it did break out beginning of the year, broke out through the December highs. And I do have a couple of trades on platinum. I was going to buy some more, and it's just been faffing around up at these levels. I think that's another really interesting market, and clearly, again, another precious metal that will get hit if we see US dollar strength. So if we did see a bit more dollar strength next week, I think another market I would keep an eye on is platinum, because it is recently been trading at its best levels in 4.5 years. So I think it's interesting. I think all of these metals at the moment are interesting. Let's see, what else have we got? Copper. I think we looked at copper, didn't we? I think we did. We did take a look at copper, because it's been coming off again with this dollar strength coming off today. Although that trend from the March lows is still up. How will GME progress in the next few days? I'm not sure what GME is. Let me put it in and see. GameStop. Yeah, they had wasn't there a big explosive move in recent days? No idea, to be honest. I think in these sort of moves, it's interesting, isn't it? Where we've got a market. So GameStop shares. I did see, I think on Reddit, the popular other social media thing out there, that a few people had options in GameStop and made a packet, I think luckily, because the price spiked up into expiry. So GameStop has gone from $20 on the 13th, which was a couple of days ago, and touched 42 yesterday. I mean, what do you do in a market like that? There's nothing you can do. I think at the moment it is a coin flip, isn't it? When a market moves like that, I think it is a coin flip. We did have a trend going into it, going into whatever happened over the last couple of days for GameStop. We had a good little trend chugging away. But when it goes ballistic like that, I think if you're in, you count your blessings and you maybe think about trying to lock in at least some profits. But for me, there's no logical place to put in a stop order for a new trade. I suppose the most aggressive thing you could do now, or I would do now, is be a buyer wherever. Well, okay, let's say we want to buy it. We're going to buy at 37 and put a stop under yesterday's low. Yesterday's low was 33, so we got a $4 plus stop. Or if you think the move is overdone, you sell it short with a stop above yesterday's high of 43. But no, those moves like that, I think I always tend to, if I'm not in, then leave it alone and wait for things to calm down. For a bit. How do you see the performance of the US economy this year? I don't really worry too much about a long-term view. I think clearly last year was just an exceptional year. Nobody at the beginning of last year would have expected what we ended up with the coronavirus. I'm surprised, I think like a lot of people, that stock markets are doing so well, that the price of oil is doing so well, considering there are still so many unknowns, and we're still, in continental Europe, the UK and the US, we're still battling this virus. I'm surprised that things are so bullish, but for me, for short to medium term trading, I've got to go with the trend. It wouldn't surprise me if we saw massive volatility, later this year. Perhaps we do see a sharper correction for stock markets, and we see economy's not recovering as quick as people expect. But I couldn't give a long-term view. Just take it day to day, week to week. Do you give your Tesla benefit to your son? We've still got it. I think I mentioned last week that my son went to uni in September and then came back and is at home. But we bought 2 Tesla shares back in September, and I said whatever the profits were, he could have them at Christmas. But because Tesla is still going up, of course, it has slowed a bit this week. I'm still in the trade, so I ended up buying. I think it was been here, so we were in profit for like 2 days, and then Tesla sold off, and then of course it's gone ballistic again. But there's another one. What would you do with Tesla up here? I think it's a difficult one, isn't it? If you really want to buy Tesla, where's your stop going to go? The closest I want it is under 800 Tesla, because the low from the last few days. But another incredibly volatile one, and one that has doubled since November. There was an interesting thing. I'm sure you may have read it as well. Toyota, who are the previous largest car company in the world, Each one of their cars sold accounted for $9,000 of Toyota's market cap. Each one of Tesla's cars sold accounts for $1.25 million of Tesla's market cap. So it shows you, I think, how much Tesla is just a bet on them continuing to dominate the sector, and how their share price is detached from the fundamentals. It doesn't mean it can't carry on, of course, but completely very different business, of course, to the traditional car companies. Let's see. What stop loss for 6 months to 1 year in gold? I think, let's say you were an investor in gold. I mean, what would you do? I mean, if you wanted to hold a long-term position in gold, you know, I would say whenever we look at gold on the videos, and if you're not subscribed to Capital's YouTube channel, if you could subscribe, that'd be great. Because clearly, if we keep getting numbers, we can keep doing all these things. But whenever we look at the gold video, the longer term gold stuff, I always start with this trend in gold from 2018. So it's nearly 2.5 years now, isn't it? This trend's been going in gold. And the longer term trend line is coming in at 1500. You know, so as an absolute worst case, if you were a buyer of gold now and you wanted a really long term stop loss, if it was going to go below the trend, it'd need to be below 1500, you know, which is 20% away from where the price of gold is. Now, 20%, if you're a long-term investor, is maybe not that much, you know. But I think you need to decide for yourself, you know, what sort of level of risk you're happy with. You know, so if gold dropped $250 from where it is now, it's still within that overall 2.5 year uptrend. You know, the question is it going to sell off $250, or is it going to go up $250 from here? That's always the question, isn't it? But for me, from a longer term point of view, that's where my stop loss would be. I suppose that the closest I'd want it if I was buying now is the other side of 1760, the lows from November. I think if we break that, the risk is for a much deeper sell-off. So let's see. So there's no easy answer, unfortunately, for that one. What's your take on platinum and palladium? Let's talk about palladium. I talked about platinum, and that trend is still up. Palladium, I think I mentioned this. This was one of my best trading markets in 2019, palladium, for the very simple reason all it did was go up. So if let's take last year out of the equation, and I only got into it because when we did a live stream in, I think it was the summer of 2019, about there, someone mentioned palladium, and it'd been a market I'd never looked at. I didn't even know what it was, to be perfectly honest with you. And I started looking at it and then trading it and basically just buying in to breakouts. And it went, you can just see, it was incredible. The second half of 2019, it was at 1400 in the summer and went to 2800 in February last year. Then absolutely fell off a cliff, massive volatility. So it was good for me in terms of profit, but I did give far too much profit back on this sell-off. I think it's been interesting this year. I have got one open position in palladium that I opened in the last few months because the trend is still up in palladium. You know, if we look at that going back to May last year, it is in an uptrend. It's just nowhere near as exciting as it was a year and a half ago, palladium. But I think it's an interesting market. The trend is still up. You know, we are just about making higher highs. It pushed up just on, well, hang on a second, I haven't got the whole thing out. Let me take the whole thing out. It's pushed up just about 5th of January this year, pushed up to a new high for this particular trend. So I am personally still bullish on palladium. You know, the trend line's coming in around, 2150. Lots of support from 2050 through to 2200. Stacks of support on palladium. So I'm still happy to sit with my long position. It's just not very exciting. But based on what's going on at the moment, I wouldn't be going short palladium. But this is another one. If we see dollar strength, it will really squeeze. It will squeeze it a little bit. But it's an interesting market, just not quite as exciting as it was last year. Natural gas. Let's have a look at natural gas. I mentioned natural gas. I think natural gas is a really interesting market. Again, whenever we do a YouTube video on natural gas, we don't get much interest in it. But I think it is interesting. And I think I mentioned a week ago that I was looking to try and get long if we had a sell-off, and we haven't had it basically. But I think it's an interesting market because, you know, if you look at the volatility in natural gas, so 2019 it was at 5, Then it was down at 150 in June 2020. We have seen this recovery off the June lows from 120 up to 340. So it's a big move in what was it? About 3 or 4 months in natural gas. And it came back here. I should have bought it here, but I didn't. It broke below the trend line, but it's really recovered quickly. So for me, I suppose there is an argument to be a buyer now, because I do think this trend is still in place, even though we've had a very brief look below the trend line. We've still got big support. So I do think, although natural gas can be an absolute crazy market once it gets going, we've got good support back here on the way up around about 218. So for me, I'd want to be a buyer with stops below 218, but perhaps it's the risk reward doesn't add up here because there's too much risk for not the same amount of reward. So for me, for natural gas, still bullish. I would much prefer a bit of a sell-off and then a bounce and look to get long. It's been fairly flat over the last week. I think if it breaks 218, the risk is it'll sell off really hard. But I think it is a really interesting market. And if we picked up on the correction from those highs, that does look to be over. The moves we've seen over the last week and a half or so, it does look like that correction's over. I am just hoping that we'll have a bit of a push down to maybe 240 and a bit of strength, and then perhaps there'll be an opportunity to have a go on that. So so it's still bullish. We'll see what happens. I'm just scrolling through. Oh, euro sterling. We never look at that, do we? But let's take a look at that. So we'll take it's an interesting one. We'll take the US dollar out of the equation. I think it would have been weak because the euro has been weaker than the pound against the dollar. This is interesting, actually, I suppose. I think euro sterling is an interesting market because clearly we had the moves in. I've got to go back to the Brexit vote back here in 2016. So we had the move on the Brexit vote. And then since then, broadly speaking, we've been in this massive range, or not massive, but this sideways range from 83 up to sort of 93 to 95, and occasionally it overshoots, but it just chops around in this range, the euro against the pound. I think there's a trade. Should we do a trade now? Somebody did ask, you're going to do a trade, so let's do a trade now. I think there's a really obvious trade to do here. Let's just pick up on the levels. So for me, if we pick up on there, so this is going back to June of last year, whenever the euro against the pound has been down basically where we are now, 88.50, 89, that sort of area, we've seen the buyers come back in. The view has been that the weakness for the euro has been overdone. So for me, that looks like an interesting trade. It's a sideways market, it's a sideways trend. We're playing the extremes of the range, and we're right on the extreme now. So let me do that trade. So we normally risk 100 quid, don't we, on these trades? So let me put a stop loss in at 88, 0.88. We want to risk 100 quid. At the moment, that's far too much. If I do 10,000, what's the risk on that? Okay, that's almost there. If I do 11,000, there we go. So I'm going to buy 11,000 euro sterling. Stop loss at 88. The low is 88.60, so I'm going to give it a bit of room the other side. The market is 88.96 to buy now, so I'm going to buy that. There we go, we're done. So let's see. That's an interesting one down here. So my stop is about 100 points away. It was 95 points away. So the way I would handle that trade is what I do is my stop is 100 points away from when I get in. If the market moves 100 points in my favor, then I'd move the stop. So it's only up to here. If the market moves to here, I'd move my stop to break even. If it carried on moving higher, I'd move my stop up and up and up. So we'll see. That'll be an interesting one to keep an eye on. Where is it? It's all the way down here. So we bought 11,000 at 88.96 with a stop at 88. Let's see how that one turns out. But it's interesting. Yeah. So interesting one for next week. Do we see the euro make something of a comeback against the pound? Let's see what happens. So we did Bitcoin. We did sort of briefly look at Tesla. Someone's mentioned Tesla. So we did briefly look at that one. What else have we got? Wells Fargo. We did that. Wells Fargo earnings today. Thanks for that. So their earnings are out, or maybe are out already. today. Amazon. Let's have a look at Amazon. So another one you'd expect to be flying high with all the lockdowns going on, or perhaps. So we haven't seen fresh all-time highs on Amazon since September. That's interesting. I think that's interesting considering the rest of the markets have been strong. The market is taking the view that perhaps Amazon is pretty fairly valued up here. So for me, it's similar in a way to the euro sterling chart. You know, we've got a long-term uptrend for Amazon. If we went back years and years and years, you know, we do have clearly the longer-term uptrend for Amazon. It just hasn't gone anywhere for 4 months. You know, so for me, the trade would be I'd be looking to be a buyer because that longer-term trend is up. Lots of support ahead of, well, just below $2,900 a share. It's currently $3,100 a share. You can see it there, just above. So for me, if we saw Amazon under a bit of pressure next week and then a bit of strength comes in, it would be quite interesting to see if there is a trading opportunity there. But pretty flat and sideways over the last few weeks. So let's see what happens. What else have we got? What else? Oh, someone's saying we've got a sell-off in oil going on. Let's have a quick look at oil. What's it doing? Oh yeah, it is, isn't it? That's it. Oh, that's quite the move. So oil's gone from 53, it's touched 52, so it moved. This is a 5-minute chart. So in about half an hour, oil lost $1 a barrel. So for me, I would still, I think it makes it interesting for next week, you know, because that trend for oil is still up. It'd be great if we got a bit more weakness for oil because we get perhaps a better entry point. You know, like I say, 50 is a big level for oil. If we got it, you know, if we did see it pushed down to maybe 51 early next week, I think that's an interesting opportunity. I think one of the first videos we'll be doing next week on the channel, the pre-recorded stuff that we do, we will be looking at oil in more detail. So perhaps there'll be another trade to do on oil next week. So we'll take a look at that one next week. But thanks for flagging that up. Ripple, I don't have Ripple on my screen anymore because of the FCA ruling. I've got Bitcoin because I saved it, but I don't have Ripple. So unfortunately, we can't take a look this time around. Okay, what else have we got? Oh, the cannabis stock index. That was it. I remember. Let's have a quick look. US cat. This is really interesting. Someone on the last live stream, Dan, who's in the chat now, mentioned this last week on email, and I never look at it, but it's a really interesting market. You know, clearly, cannabis stocks have been popular, then haven't been popular, then have been popular. In the US, this is the cannabis index. Heck of a move today as well. So this is another interesting market that you can trade with us. We did have the breakout in that. Let's have a look. I don't think it's one I would ever trade because it's probably not that massively traded. But if that's your thing, it could be an interesting one for next week. We had the breakout on 11th of Jan through sort of 650. It touched 850 today, so a heck of a move in a week. It's 30% move in a week, and it's reversed. So I suppose if you want some excitement this afternoon, the cannabis stock market index, the US cannabis index, does look interesting, doesn't it? And you have to say again, if we look, let's forget that it's a cannabis index. If we look at it, it's like any other market. You know, we've had a great trend over the last week. What are the levels to watch? What was the low for yesterday? The low for yesterday was $7.35, so $60 below where we are now. It's quite an interesting one, I think, isn't it? To see what happens if it sells off. I would be looking for a buy-in opportunity here. It's quite interesting what's happened today, that it's gapped higher and then just got clobbered. Yeah, let's come back to that one when we do the live stream next Friday. Let's come back to the cannabis index. So if you're in here, Dan, if you can mention that again next Friday, and we'll see what happens. But that trend is still up. Do you do day trading? No, I maybe now and again on the S&P, now and again, but I'm just trying to find an S&P chart, you know. But I don't really sit there and try and jump in and out of stuff 30 times a day. This is getting hit quite a bit actually, the S&P, isn't it? Look at that. I think we're seeing an interesting end to the week. We're seeing lots of things reverse over the last day or so, and I think it makes the US market shut on Monday, but it will make for an interesting week next week, depending on where everything ends up this evening. What's the dollar doing? Is the dollar still going up? Let's have a look. Oh yeah, it's slowed down a bit up here. Let's see what happens. Gold. We had a look at gold, so you can watch the recorded version of this and see gold later on. US dollar yen. Let's have a look at that. Dollar yen. So if we bring up our daily chart on dollar yen, it's interesting because we've seen going back to March of this year. So when the chart is sliding, of course, what we're seeing is dollar weakness and yen strength. Almost a textbook downtrend in dollar yen. Great selling opportunity in hindsight. Greatest trades always done in hindsight, obviously. But great selling opportunity mid-November. Moves down to its lowest since March, it looks like here. But again, if we did see a dollar comeback, this would be an interesting market to watch because we could see a recovery from here. For me at the moment, it's still weak. That trend is still down. We can be patient, and patience I think is a hard thing when it comes to trading. But I think it's an interesting market to watch next week. If we did see this start to turn around, the closest I'd want my stop is the other side of the low so far this year in January at 102.50. But let's come back to it in a week's time. Maybe this strength in the dollar the last 24 hours is just a flash in the pan, and the dollar next week starts sliding again, which means this will push lower again. But let's see what happens next week with this dollar thing. Okay, coffee. Coffee is another interesting market. I don't know. Do we cover coffee? I'm not sure. I've had a trade on coffee for ages and it's not gone anywhere because I timed it really wrong. But the trend on coffee since here is May 2019. You can see the trend on coffee has been up for however long that is, more than a year and a half, isn't it? I think I stupidly bought in. I've had the position for ages, since the summer, here somewhere, and it's a rubbish timing it was. But for me, it's pushing out. It wouldn't surprise me. Perhaps we see it run out of steam again. So for me, the trade I would do, I wouldn't go short coffee because the longer term trend is still up. But if we see it come under some pressure and have a look back at the lows we were in late October, early November, perhaps it looked to be a buyer then. But I think it's another interesting market. It's another one that no one really talks about. But you can see there are some great swings in the price of coffee. When other markets aren't doing very much, there's always something out there that's moving. We did natural gas, so if you missed that, you can watch the recording when we finish that, and you can do that. Is there anything you'd do during a sell-off like WTI is doing right now, or you'd sit it out and see where it goes? Good question. I think if we pick it up, crude oil. So we got this sell-off. So what would I do? So for me, and let's not forget, when it comes to trading, most people lose. Yeah. So normally, what your initial reaction is the wrong reaction. So I think what I would do, the trend for oil is up. So looking at the daily chart here, for the last 2.5 months, we've seen a rising oil price. So for me, I want to be a buyer until things change. So for me, a one-day sell-off doesn't change anything. So I would be thinking now, where do I want to buy? The market is, for me anyway, perhaps giving me an opportunity to get in cheaper than yesterday. Where do I want to buy? That's what I would be thinking now. So I'd be planning. I wouldn't be selling short here because the trend is up. So I'd be thinking about levels where I want to do the trade. Where's the closest I'm going to have my stop loss? The closest for me would be here, the other side of 51.50. So if I really wanted to buy it now, I'd be a buyer now and put a stop at 51.20 or something. But I'd just be watching and waiting for some strength to come in. That's what I'd be doing. So I wouldn't be trading it. I wouldn't be reacting to a sharp move in the market. I'd be waiting to try and figure out what I'm going to do next. And that still means you can lose money, obviously, but I wouldn't be just trying to chase it based on what's going on now with the market. I think one of the greatest skills we can have when it comes to trading is patience. but it's very difficult. I think particularly in this day and age where everything is all flashy, 24 hours a day, and you can, there's always something moving. But I think it's being patient and planning the trades. Is a really important skill to have. Okay, what else? Platinum. We've done platinum. Yeah, we did that. Palladium video. We'll have a think about that. Tilray. Let's have a look at Tilray, a stock. How are we doing for time? Oh, it's going for an hour. I'm going to try and wrap things up in the next 10 minutes or so. Tilray, it's an interesting one, but that's another one like when we looked at GameStop. So for me on Tilray, what do you do? The share price has doubled in a couple of weeks. What do? I think you just grit your teeth and buy and hope it doubles again in the next couple of weeks. But I think in terms of a sensible low risk trade, it's quite a difficult one, isn't it? I think if there was a market that I thought, I'm really missing out here, I want to jump in, I think one strategy, and it's hardly rocket science, is to say, well, look, it's gone up again today. What if I don't get in? Is it going to carry on going up? We could be a buyer with a stop loss under yesterday's low. That's one approach. It's not one I use very often, I must admit. But I think I find it very hard in markets like that, which are clearly quite rare. Even with the craziness we see in Bitcoin and Tesla, it's quite rare to see something double in less than a week. But for me, it would be one that I probably wouldn't look at it because it's a little bit too crazy for me. Because just today, look at the volatility today, and it's very important for me. It's important to consider volatility. It's gone from $22.50 to $18.50, so it's travelled through $4 today. It's had a 20% move just today. And I think it's very hard to have sensible risk management when a market's doing that. But if anyone's in it, good luck with it. Whatever happens. Okay. What else have we got? Expedia. You would have thought that, I don't know, last year you'd have thought that it had done badly, of course, because of the pandemic. Travel company. Aren't they? Travel company. Oh, it's interesting, isn't it? It's really interesting, actually, even with, clearly the lockdowns coming back in again, that trend is still up. So for me, I would still be looking to be a buyer. It's had a run. It's had a good run from 90. Is this in dollars or is this in pounds? I'm not familiar with this one. Doesn't matter. Whatever it is, I can't. Oh, hang on. Market info. I could look at that. Market info. US. So it's US listed. Okay. So $140 a share. Was $90 back in October. So for me, I might not be a buyer at the moment. If we did get a bit of weakness, I'd be interested in being a buyer. We need to bear in mind with Expedia, we're bumping up against levels that have been a problem since 2018. So it's an interesting one, but perhaps, for me, the sell-off would be a better opportunity, I think, for that one. We did gold. Huge drop in S&P 500. It's all happening this afternoon, isn't it? It's big, but it's only gone back to where it was a week ago. So it is, but compared to the volatility we've seen recently, it is a big drop. A little on the FTSE. Let's have a quick look at the FTSE 100. So the UK market. I must admit, I think if you want to trade indices, I think I never look at the FTSE. I think that the temptation is, if you're based in the UK, that you look at the FTSE because it's our market. But it's been such a weird one, the FTSE, because clearly what's going on with the pound can have an impact. If you have a weaker pound, it lifts the FTSE because so many FTSE 100 companies report in non-sterling. So a weaker pound helps the FTSE. A real surge, as we can see, just last week, up near 7,000. And now it's trading at 6,700. I would be tempted to be looking for a buying opportunity in the FTSE, but not today. I think going into next week, I think it's interesting. We looked at the S&P there. It really has nosedive, doesn't it? We looked at the S&P before. I think we got this whole area. For me, next week, I'd be watching 6,600 to 6,680. So if I was a buyer, I would probably want my stop the other side of 6,600. So I think it's an interesting one next week. That there's clearly a lot of volatility this afternoon in markets, so it does make for an interesting one next week. Tesla, we looked at Tesla, and we're going to go in 5 minutes, and we're going to wrap things up. Oh, there was a few for Facebook. Let's have a quick look at Facebook. We'll bring that one up. It's a bit like, we're not clear, it's not like Amazon, but it's not done anything for 3 months like Amazon. But I'd be a buyer for a trade. It's what's interesting on Facebook. You can see from a price action point of view. You see the daily, today's candle, the blue candle there. Markets, as we've seen, lots of stock markets are getting pretty heavily hit today. Facebook's going up. And I think it's quite interesting where it is. So actually, out of the shares we've looked at today, if I had to buy a share out of the ones we looked at as a short-term trade, I think that's interesting because Facebook, when it sold off from what I was guessing is that their all-time highs, when it sold off from its all-time highs in August, all-time highs were 307, sells off to 244, bounces back again. 244 has held over the last 24 hours. So it's a really interesting one, I think, Facebook. So if we were a buyer at 252 with a stop maybe at, I don't know, 230, 235, something like that. Just really, it's because it's quite a big level. Oh, let's do that trade as well. As everything's going crazy today, let's buy Facebook. It's quite interesting that on the way up, this sort of 244 was a bit of a problem, and it held on the way down. So let's do that trade. Where would we put our stop? Let's say 230 for a stop. 230 for a stop. So we're going to go put a stop loss in at 230. And how many shares are we going to buy? If I buy 6 shares with the stop at 230, my risk is 97. So let's do that. Let's buy that. There we go. Done. That'll be interesting. It's quite interesting that it's going up today when everything else is falling off a cliff, Facebook. So there we go. Some interesting moves. Right. We are going to wrap things up now. So I am going to just flip up my contact details. Which are... Oh, before we do that, I should say we've launched spread betting, obviously, which if you're in the UK or Ireland, you'll know it's a tax-free way of trading. So you can go to Capital.com and open a spread betting account in a few minutes. So you can do all of that. If you have any questions after this, clearly, if you enjoy what we do, if you could click on the thumbs up thing on the video. If you could subscribe to us, the more numbers we get, the more regularly we can do these things. Clearly, I don't do these things for free. They've got to pay me. So if we've got lots of people doing it and liking it, then it's good. We can carry on doing it. But if you to open an account, a real account or a demo account, go to Capital.com, find out more about the company. If you have any questions, you can drop me an email, david.jones@capital.com. Clearly, we can't do financial advice, but if there's just any questions you have about trading, I'm always trying to help if I can. And you can follow me on Twitter @JonesTheMarkets on Twitter, and of course follow us on YouTube, Twitter, and Facebook. But thanks for coming along today. We've covered an awful lot today. It feels like it's a really volatile end to the week, which I think makes for a really interesting week next week. So the stuff I'm going to be watching next week, oil, I think, as someone pointed out, it was really falling off a cliff. I think that's a really interesting market to watch next week, and this US dollar, to see if we are actually seeing the US dollar turn around. But we'll see. We'll see what next week brings. But as I say, go to Capital.com to find out more. And that's it, isn't it? We'll wrap things up there. Enjoy your weekend, and we'll do this all again, I think, next Friday.